All right, so we're going to talk about imbalances and why my initial bias for the market opening Sunday going into Monday was going to be green. And we'll start off with just looking at the imbalances. And so again, if I just clear the wicks off the chart and we kind of look at the structure of the market here on the 1 hour time frame, a couple things that I notice is that we have a green up close candle here and one right here, and price trades down, and you can see that we have this imbalance right here, and we get that black candle that trades into that imbalance and now closes that loop, rebalancing that area. And so we would assume that if the market is constantly looking to rebalance and move into spots of liquidity, we could say that the market came down here, left an imbalance, which created swing lows. So there's a pool of liquidity sitting down here, and the market comes down, closes in that pool of liquidity, gathering uh, orders to go long, and we see the market come up, kind of rebalance this candle that drives above here, so another run on liquidity, and then finishes balancing this area that was imbalanced. And then we have price run all the way up here into another pool of liquidity. Um, I had marked on a previous chart, there was some hourly down close candles that were in this area, and so it needed a green up close candle to balance that area again. And so those imbalances are also where you have swing highs sitting, as price would kind of come down, create a swing high, and then come back down. So over here, if there's nothing but down close candles, then we would want to see an up close candle come into this area and balance it, while at the same time it's grabbing liquidity. So that's where I'm looking to find where those pieces of structure are on the hourly time frame, and also on the daily where the imbalances are at. Okay, so if we can now say that when price moved through here, this whole area has been balanced from here to here, and it immediately rebalances coming back down. As the market finishes and closes out the day, that was Friday, I can go to the hourly chart and I can say, well, what has been left unbalanced? And if I highlight this area right here, we have price came down here. The candle bodies closed below these candle bodies, so it ran out these lows into a pool of liquidity, came back up, and then it just started rebalancing itself on top of the candles that it was creating. So as this candle rebalanced areas in here that were imbalanced and some down here, this candle rebalances this candle and some in here. And now this little imbalance gets immediately rebalanced. And you can see how the loop just keeps closing in on itself. And that's the market moving in an upward direction as it rebalances itself over and over again. So as I'm looking for where I want to see price head to, I'm going to highlight this area because I want to see this area where we have the highest up close candle and the bottom of the highest up close candle here as an imbalanced area. We have a void and we have nothing but down close candles that have formed in this area. So to be balanced, we would need a series of up close candles coming up into here. The second thing I'm going to notice is that as the price ends on Friday, we've also left an imbalance right here. So now that I've marked these areas of imbalance, we can move forward and see, well, where is price going to go first? So we'll put the wicks back on. And now looking at this structure right here, let's notice a few things. So first of all, this hourly price action right here is a swing high. You can see that it makes a couple swing highs right here. And as price runs up, it takes out this swing high, and this candle body closes above these candle bodies, telling us that price is willing to continue to move up because the candle body closes above this swing high. And what do the wicks do? The wicks happen to create relative equal highs. So these are placed intentionally because now there's a pool of liquidity sitting underneath here or above here, and price is going to want to come back to that. So if I just take a look at the first candle of the open, we'll move forward in price. We'll see what price action does. So that candle drives down into this candle and wicks out of it. I'm going to take a gam box right here, and we'll just kind of look at that area. So the most important thing to look at is where the candle bodies open and close. So we see price open higher, it gaps up, price drives down into this area that's balanced. It's grabbing and pairing orders from here, and the body closes above 50%, or the CE of this unbalanced gap. So to see that this candle body closes above 50% is another sign that price is willing to continue up. So we're not going to take plays just based off of the hourly chart as far as our entries go. So if we move down to a 15-minute time frame, we can start narrowing down where our entries are going to be. And then from there, we would move down to the 5-minute time frame. So looking at this area that we highlighted on the hourly, we have a gap that goes from here to here on the 15, and we see candle bodies close below these candle bodies. And these candle bodies are holding this area right here, as you can see, goes slightly lower, same, and then this candle body closes higher. So that's showing price. Again, the wicks are doing the damage, but it's showing price starting to want to head up. And then we can just go back down to the 5. So initially I had this area that needed to be balanced on the 5. This is where price opened up, and as you can see, it ran what? It ran a high, so it ran into grab liquidity. It's a liquidity pool, and now it's going to rebalance. If we look at the gap on the 5-minute, candle bodies close above 50%. And we can see what price has done after that. It continues to make higher lows. Okay, so this is saying price is currently not willing to move lower. Okay, so we have candle that opens or closes, candle opens, comes down a little bit, and then closes almost even with this one. So almost a complete immediate rebalance. Price opens, comes down, and now we have price again close above the swing high that was created after this swing high was taken out. This is all showing that price is willing to move higher. And if we're looking at this on the hourly time frame, really what we're looking at on the 5 minute with this wick would be 5 minute candles coming down and then 5 minute candles coming right back up and then moving higher. So creating an imbalance and then rebalancing right away and coming up. And we can see what that looks like on the 5 minute. So we're looking at 50% of an area that price needs to get to in order to continue in the direction it really wants to head. So if I look at this area right here, take it to this wick, we have this area and price just dips into discount. And it almost rebalances to where this last high was. But this was good enough, so it was an area of discount. And then here's where you're seeing your wick come down. Comes down, immediate rebalance. Comes down, immediate rebalancing up. Okay, so price opens, slightly gaps up, uh, runs high, and then comes down and then closes right here. So the hourly is kind of balancing itself as it continues to go up. But we have these candle bodies that the low is closing higher than the low of the previous one. Wick's doing the damage where it has to come back on the lower time frames and rebalance some stuff along the way. Okay, we can see price start to make its move up. Again, we got candles and wicks overlapping, so it's rebalancing. If I take this candle, it's coming down enough. It's not closing below 50%. So the candle body's not closing below 50%. So that's showing that price is still willing to go up. Okay, candle bodies hold 50%. Wicks come down and do what they need to do. And again, we have price close above the previous swing high. And now as you can see, as we're moving slowly forward, this action right here is we're seeing price rebalance this area. It's the overnight session, so it's just kind of slowly meandering up and down, completely rebalancing itself as it continues to fill in this area that it needs green candles in. This last bit of price action, we can go down to the 5 minute, and this is what you're seeing. So we have price close. We go right here. Then we have this next candle that comes up, rebalances. So you can see on the 5 minute how it's creating imbalances in here by these large green candles, and now it's sending price back down to rebalance those areas, but then immediately starts coming back up. And so price is doing this kind of stuff on all time frames. The hourly and the 15-minute chart, if you look at the 15-minute chart, it's doing the same things. Now we're just seeing different fractals of it. So when we see stuff like this where we have this imbalance and price isn't willing to come down into here, this is letting you know that price is going to come back here at a later point of time. So what we want to see is where does price, what does price action give us after we've filled in this imbalance? And so we just keep marching forward on the time scale. Okay, price kind of just rebalancing each other back and forth. We get another large candle up. Almost completely rebalances to that wick. Okay, so now we're at the 4 o'clock open. So we should see price start to give us a little more action. It is a holiday, so we're not expecting the kind of ranges that we would get on a typical day. But we see price start to drive up. And as we look at structure along the way, if we look at the 15-minute, really, if we have price holding right here, you can see all the candle bodies holding right here at a specific level, which is probably just above 50% of that. You can measure that. Okay. So this candle that came into this new area of liquidity, price is holding candle bodies above 50%, and look where it's building orders just below equilibrium into discount. Okay, as it's moving up and down, building orders, and then we have price start to hit its marks. Okay, back down into the order block. Starting to see a little more price action. Okay, and we've almost filled in this whole imbalance here. And you can see price just kind of accumulating right here, but not really going anywhere. Okay, so it's just building orders right here. It's running liquidity on both sides. Okay, we're still pretty much holding that 50% level. Yeah, some of these candle bodies are right at equilibrium, but we're not closing deep into a discount. Still holding. Boom. Okay, and what time is this? New York open. Okay, so now we're adding the we've had this move over most of the night. 4 o'clock, we get the true day open. New York open, we get the spike in volatility. So now we've completed this loop. So if we had taken a play down here, we would have had a nice finish right at the start of New York Open. You could be done for the day. So now we want to find out, okay, well, is price going to come up here? Is it going to start going into this imbalance up here? Well, how do we know that? What do we want to see price do? So again, we're going to go back to an area that's balanced. which is here's a 15-minute, these three candles, and this down close candle has created this balanced area right here. And we're just going to measure that. And we want to see price react right around 50% or just into premium. So we don't want to see any candles close above this swing high, because if we get candle bodies that are starting to close above this swing high, then just like previous, that means price is going to be showing a willingness to continue higher. Okay, and so we get this area where we have price run up, and I'm not going to dive into engineered origin, but this candle closed above this swing high into this pool of liquidity up here. So then this candle would be your engineered origin. So if you wanted to take a short, we would want to see that high get ran. And if we zoom in here, it runs that high, and then look what it does, it immediately comes down. Okay, so what have we seen price do thus far? We marked out our area that was imbalanced. We see price work its way up, and it's now completely balanced area. It's left some small imbalances along the way, and we have some imbalances that are down here and some imbalances right here. But for the most part, it's been placing green candles in this area. So once an area is balanced, and now we're bringing time into the equation where now we have New York open, we have an injection of liquidity and volatility. We can go down to a 5-minute chart and we can refine where we're looking at price. So if this area is a balanced area, okay, where price is just overlapping itself, and this would be an order block where we would want to see price return into and pair orders because it houses liquidity. We can refine it to the 5-minute and highlight this, and we would want to see price reject at equilibrium. So if I get rid of these, where we determined our engineered origin on the 15-minute, we can see that price wicks up to equilibrium, slightly into premium, but that's pretty much dead on. And that's where it begins to reverse. So knowing that, you can refine entries all the way down to the 1-minute. This candle right here had taken out the swing highs. So this could be your engineered origin, and anything above that you could take orders short on. Okay, that would be an aggressive entry. If you wanted to wait till for a safer entry, once you see price close below here, we're going to start looking for an area where we can get into to take short. So price closes below here, and we have nothing that returns up into here. Okay, so no entries right there. Price closes below this swing low with this candle, so we'd want to see entries anywhere up here. Price doesn't give us that. So then I'm going to go to our next candle that this candle had taken liquidity prior. This candle closes below it. So now I'd want to see price return back up into here. And what do we get? Price actually gives us the opportunity now to get in short after closing below this green candle right here. And so you have a very small fair value gap. Price comes down, comes back up. You have an entry with very little drawdown, and price immediately starts to run away. So now that we frame this up and we're looking at a few different possible entries, now we want to see what kind of price um, reaction we get after it stabs into a pool of liquidity and balances an area on a larger time frame. So you have a beautiful down close candle right there. On the hourly chart, you can see where we have imbalances, okay, where it's void of any down close candles. And what do we have price doing? Driving down. And so we get price that now, if we take the top of this and the bottom of this and that little bit in there, we have price that's now almost closed this loop completely. So now we have down closed candles that have closed the loop of any imbalances left along the way of price moving up. And we get a nice reaction with that 1 hour candle because it rebalanced, ran into a pool of liquidity, and now it can rebalance a lot faster, driving towards the next inefficiency, imbalance, and pool of liquidity down here. We also have the order block on the 1 hour candle. You can see price drove up into that order block and rejected. I haven't measured this, but let's just take a look at the wick for the sake of looking at all the different aspects of PA. So about CE of that wick, counter bodies drive up into there and then reject from CE pretty much. So a couple different confluences, and then we looked at the confluences on the balanced ranges that were up here on the 15 and 5 minute, and that gave us entries for a short afterwards. But this is just one idea of taking price from down here, and once it's showing that it's willing to continue higher, getting into positions at key entry points when price retraces, and we can set a limit sell at the bottom of this candle. And you would have hit it before New York Open. And your framework for that is, because price has taken liquidity down here, we want to see it come back and rebalance and dip into another pool of liquidity up here. And the market's going to just continue to do that over and over again. So these pretty much equal lows for these candle bodies, those were engineered so that it can continue to keep this liquidity pool open down here. And who knows, it might come up here first, and then we might come all the way back down here. But this helps us kind of formulate why we want to take trades in certain directions and why price continues to move in certain directions, and where we're looking for price to show sensitivity to. And if price gives us that reaction and shows sensitivity, we can formulate a narrative of price is going to have a good possibility of reversing. And so we talked about how the candle bodies kept closing above other candle bodies, and that was given a narrative for up. And then we saw in the 1 minute candle bodies quickly closing below candle bodies, and that was giving the narrative to go down. And we talked about the patience in waiting for a play by just looking at different candle bodies. We talked about this one. It didn't give us the entry here. Talked about this one, it didn't give us an entry. Came to this one, and then we got our entry. And if price happened to come all the way back up here, if it came down and then came all the way back up here, your stop is just going to be just above that fair value gap. So you're not risking a lot, and you can wait and see. So if you get stopped out, then you just start looking at the other possibilities. Maybe it wanted to come back and rebalance this, and the entry was going to be at this fair value gap. Put an entry in there, put a stop right here. But this allows you, by looking at where the candle bodies are closing, it allows you to formulate entry points and targets. So I hope this was helpful. I hope this was a kind of easy, digestible way to look at price action and look at imbalances and pools of liquidity, and kind of gives a narration of why price does what it does and how it's always seeking to do those two things, rebalance areas of imbalance and move to pools of liquidity.